Why do most traders lose their money in trading? Hi, we decided to devote this video to a very specific topic. Why you, especially if you have recently started trading, continue to lose your money, and why do losses exceed your profits? Before we start, subscribe to the channel and write your ideas in the comments below about the next topic of the videos. If you are ready, we're getting started. Subscribe for our Telegram channel where we post free signals to work out, useful articles, educational videos, and more. If you want to become a professional trader, visit our website and figure out how to join our community, where our students master their trading through consistent practical lessons and trading diary check with the feedback. When you join the community, you go through the video course. This video course represents theoretical base. Then you pass a test to check your theoretical knowledge, with further limitless practical lessons in Discord server held every week. It's impossible to make your trading profitable alone. Join the team of professionals where you will level up your skills with no limits in time. I would like to start with listing the reasons for the failure of most traders. But without explaining how to avoid this, the video will not be informative and will not teach you anything. Watch till the end where you will figure out how to not only save your deposit from melting, but to grow it effectively. First of all, the entire market functions exactly the way it does because of the mistakes of most traders. Just because the market is a cocktail of emotions, and the task of every trader entering the market is to move from the majority to the minority, from those who lose to those who earn. So why does this lion's share of traders lose, including most likely many of you? First reason, uniqueness of your trades. The working space of a beginner usually looks like that. Many indicators, Fibonacci retracement, a lot of different levels, and the core problem is that every trade of such a trader is absolutely unique. It looks like, oh, I see here crossing of two lines here on my indicator RSI. Here I have one strong level with coinciding with a strong level of Fibonacci. And now I'm expecting the pullback from this side, relying on these arguments with a stop loss above this level. But the problem is that he would probably never repeat the same strategy, the same trade. Why? Because there is no general rule for working out this situation. This situation absolutely unique. And a person trading like this have no idea about the working volume, about the potential, about the risk management of this, and about the risk-reward ratio. As well, he probably do not look to the order book, analyzing limit orders and so on. All the trades of a professional trader always absolutely similar. They really look like from the assembly line. Always the same potential, always the same working volume, always the same entry points and formations. Minimum indicators, minimum analytical tools except levels and volumes, and the core instrument trading terminal with the order book. Next mistake of the amateur is the absence of trading system. When you have no trading system, your trading becomes chaotic. This is a strict list of rules that include different scenarios of a trader's behavior. Preparation for trading session, emotional check, selection of setups by rules, principles of opening and closing position, and finally the risk management with stated maximum leverage and daily drawdown. If you are interested in how to build your trading system from scratch, please let us know writing in the comments. Another one mistake, uncomfortable trading volume. Most traders have no patience, craving to earn money and leave from trading as soon as possible. Unfortunately, it's impossible to reach such a high level of trading in short period of time, and give yourself 1 or 3 years. Many of you trade with very high trading volumes, having no good statistics as a trader. This uncomfortably big volume that you are psychologically not ready to push you and your mentality, leading to rude mistakes. Then it causes emotions, uncomfortable trading, and loss of your deposit. Usually traders who trade with overexceeded volumes remove stop losses, waiting for loss to close at zero or close profit too fast. As a result, negative mathematic expectation that on long run ruins your deposit. And frankly speaking, such an approach can really damage not only your deposit but your nervous system. The logical question is how to identify comfortable volume. The comfortable volume is the volume that you, when trading and having several systematic stop losses, cause you absolutely no emotional change. If your convenient volume is $10, trade $10 till you accumulate confidence and good statistics. Then increase it, let's say, to $50 and so on. Finally, rude mistake for many traders: trading is the source of adrenaline. It's absolutely wrong approach. Every trader should treat trading as a professional activity and a full-time job. No emotions, absolutely. But unfortunately for many traders, trading is a roller coaster and the source of emotional cocktail. Finally, let's summarize all stated above. First of all your trades should be absolutely similar to create positive mathematical expectation. Then you have absolutely strict trading system and you should adhere to this system. If you follow the rules of your system, the market will reward you. Trade only with comfortable volume. Be sure that your nervous system is safe and sound. Grab good statistics and experience, and only then increase your working volume. And finally, treat trading as a professional craft and full-time job. Thank you for your attention. I hope this video was useful. See you on our streams and next videos. Wish you good profits.